Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is Ben Cahn. Ben is a registered trader with T3 Trading Group and also runs his own trading room called the Trader Treehouse. Thanks so much for being with me today, Ben.
Thank you very much for having me.
All right, so you're a new guest here on this program, so I just want to start off having you introduce yourself for the audience. Talk about how you got into trading, how long you've been trading yourself, how you found T3, kind of the whole thing.
Right. Let's see. How did I get into trading? Well, when I was a kid, when I was probably, I don't know, in the single digits, I remember looking at the newspaper and seeing all the stock tickers back when they used to print them, and that's how most people checked them. And this was
Mm-hmm.
like in the early 90s. Uh, I was looking at them and I didn't know what they were, and I asked my dad, and he told me, and the light bulb went off because I was like, wait, you mean I can buy something today and then tomorrow, if it goes up in value, I pocket the difference? And he's like, yeah. And he told me the stocks that he owned so that I could then start to track them. And I remember they were Sun Microsystems, Disney, I want to say Oracle at some point. And I watched them, and I just kind of thought my cocky little 7, 8 year old brain was like, I could do this. I'm smart. I'm smarter than everybody. I know how to do this. I could
Mm-hmm.
figure it out. And so that kind of just planted the seed. And then it wouldn't be until I was 18 or 19 at the just about the bottom of the housing crisis, 2009, that I was working here in Hollywood at a post-production facility for movies and TV shows and stuff. And this designer guy, who's still a friend of mine to this day, told me, "Hey, you're interested," because he was seeing me checking stocks online, and he said, "Hey, you should open a trading account." And then he gave me a piece of bad advice, which was, you should start trading penny stocks. That's a good way to get started. I was like,
Uh,
okay. So I started
mm-hmm.
I started Googling. I literally Googled like hot penny stocks. And it took me
Mm-hmm.
to, wouldn't you guess it, like hotpennystocks.com. And I just got sucked into that stupid waste of a world for a good couple of years because, as I'm sure many people watching or listening are familiar, they're full of just pie in the sky promises. And I thought, oh my God, I'm getting in on the ground floor of this company that makes sponges or additives for your gas tank that'll improve your mileage. And so I messed around with that for a couple of years, and then discovered the magical world of options trading, which further sucked my soul out of my body. But throughout that time, I was working full time. I continued working in Hollywood, bouncing from place to place, and all my extra money went into funding my trading account. And I struggled constantly with the pattern day trade uh, rule, with the
Mm-hmm.
$25,000 threshold for your account. I would like get above it and then feel like, okay, cool, now I can really stretch flex my muscles here. And then boom, I'd go right back down and just get screwed. And I did not know. I mean, I did know, but I thought that they were kind of like something shady. I didn't know anything about prop firms.
Mm-hmm.
And it wouldn't be until a couple of years ago that I started to really look into them more seriously. And also at the same time, my trading had significantly progressed because I am a genius and I am a billionaire and I am probably the best trader in all of FinTwit. And everybody knows who I am. People follow me. There's thousands of people signed up in my chat room, not to brag or anything, but yeah, then I discovered, oh man, going the prop trading route is something that I wish I had done so long ago. It's just, oh, it's so much better. So yeah, I just asked around. I asked some people if they knew of any good reputable prop firms. And then I found T3, and I spoke with Derek Oldensmith, who's awesome, and
Mm-hmm.
got sponsored, did my SIE, did the Series 57, and then I was off to the races. And here I am today.
All right. So Just a reminder for everyone who is here, if you haven't been here on these events before, this is a Q&A session between Ben and myself, but also between you and Ben. So I'm putting a comment in the live chat now so you can see where it is. Just submit your questions there for Ben, and in the second half of this, I will ask him all of them for you. So we will make sure to get to all of those questions that are submitted by the end of today's event. So Ben, you've been in this game a long time. You talked about how you've gone through trading penny stocks, trading options. Now you're in the equity world with T3, a trading group, also, of course, trading options still. How would you describe your trading style?
I would describe it as terrible. I'm sorry, I'm going to be giving you a lot of joke answers because it's how I cope with things. No, my trading style is I swing. Sometimes
Mm-hmm.
I would say like 80% of it is swing trading, and then 20% of it is day trading.
Mm-hmm.
If there presents a good opportunity, or if there's a tradable bit of news that I happen to see and come across, I definitely like to go in and do a little bit of scalping. Hopefully it works in my favor. Yeah, I describe it as, yeah, mostly swing trading.
All
That's
right.
where I'm most comfortable.
Okay. So everyone can see your positions. They're on the screen. So me looking at them, you're trading a lot of options. Are
Mm-hmm.
you mostly an options trader, or do you trade mostly equities, or kind of back and forth depending on what kind of market cycle we're in?
Back and forth. You know, as I'm sure many other traders can attest to, I wish that I had just gone the conventional wisdom route when I got started and just put all my money into like the safe, smart things, because I'd be probably happier, healthier, better off, you name it. Um, because I feel like sometimes the trader mindset keeps you from capitalizing elsewhere. Like, for example, the GameStop debacle. I mean, who could have predicted that it would have gone from where it did to where it ended up?
Mm-hmm.
But I owned a bunch of it in the teens, and then flipped it and thought, oh yeah, there it is. And then when it was in the 20s, I thought there's no way in hell it's gonna do what it did, because I'm used to seeing stocks just, at best maybe do a couple 100% in a few weeks, but not like
Mm-hmm.
that. Whereas like, oh man, if I were a lot more ignorant, but who knows, I might have ended up holding a bag. But anyway, I tend to, I put hedge in quotes, but I tend to always kind of be ready. I like to be ready for there to be any kind of rug pull, which, I mean, my style is pretty really basic, really vanilla, really bare bones. I don't do a lot of spreads. I don't do a lot of iron condors and all that stuff. I'm just a straight up long puts or long calls. And so at any given, during any given week or time period, I've got some puts or calls on the SPY, on the Qs, and then on individual names. And then yeah, I usually like to build positions in tickers that I think are gonna break out, or yeah, are undervalued. And that lends itself to that same thing I just said a minute ago about, like, I wish I would just do less, because I still struggle with that. I think doing less can pay so much more. Like, I can't tell you how many dozens and dozens of tickers that have come and gone where I'm like, oh my God, I owned so much of that and it has gone up tenfold. And I like Eyes Lips Face, ELF, the makeup company.
Mm-hmm.
I remember tinkering with it in the teens, and I thought, I know that this is undervalued, but for
Mm-hmm.
some reason it's just hovering around the teens and like less than $1 billion market cap. And I thought, I must be missing something. But then sure enough, I look back and now it's 10x, and I'm like, why didn't I just why didn't I just hang on to that? So having to kind of I keep having to ground myself and try to say, like, okay, I need to do less. I need to focus on what I think are the most promising tickers, and just like slowly build positions in them and try to have the fortitude to hold on and see them through for the true potential that I believe them to have.
Okay. Yeah, I mean, I think that's great. Okay, so kind of we've gotten to know you a little bit. So this is kind of my opening question for traders on this event. Is how would you grade your week of trading so far? So we're only 2 days in. I usually do these on Wednesdays, but I had to move to Tuesday this week. So we're usually at
Yeah.
the halfway point. So that grading scale is, your typical kind of in school, A to F. And why would you grade it however you do?
Well, so far it has been a very uneventful week for me
Mm-hmm.
because we are going into the Fed tomorrow, and there's earnings abound. So
Mm-hmm.
I'd give myself a B minus
Okay.
because there ain't a whole lot to do, and I'm kind of giving myself some a pat on the back from last week, wherein I took some profits on a bunch of things. I had some Netflix calls going into earnings that were very profitable for me. Took those off. Had some Nvidia puts going into this week that were pretty profitable.
Mm-hmm.
Uh, had some First Solar calls last week that I took off. Again, profitable. Um, I'd give myself a little B minus.
Okay. Yeah, solid passing grade there. All right,
Yeah.
so let's kind of get into the news of this week. You mentioned it. Focus is on the Fed, but also around earnings. So before we get into any specific tickers, talk me through your typical strategy for an earnings play.
Oh, earnings. Oh, we love to sell our positions before earnings and then watch them rocket, or we love to hold our positions into earnings and watch them tank. Don't we,
Mm,
fellas? Don't we,
mm,
ladies and gentlemen? My strategy into earnings is always woulda, coulda, shoulda. My
mm,
strategy has become to not really do anything, honestly, unless I'm really, and I mean, Nvidia a couple weeks ago is a perfect example where I'm like, this thing has gone up so much going into earnings. Surely the AI theme has been priced in. And then wouldn't you know it, it just absolutely wallops and goes up 25%. And $800 could have netted you 30 grand. And I'm just
yeah.
going, God, I hate my life. I gotta
I mean, I don't think anyone expected what happened with NVIDIA to happen with NVIDIA. So,
somebody knew. Somebody
I
always
mean,
knows.
somebody, yeah.
Somebody always knows. If you follow Unusual Whales on Twitter, who I
Mm,
love and admire.
I do love that account. Hmm.
But yeah, my strategy is usually just to watch and to learn, because there's always something to be gleaned from how the market reacts, and it's always just fun and interesting regardless. What I do like to try to capitalize on is the day after. So
Mm,
this is probably a bad example because it's a more illiquid name, but Mercado Libre, the ticker symbol MELI,
hmm.
their last earnings saw the stock gap up and then just trend down the whole day. And you could have bought puts. I just wasn't paying attention to it, but you could have bought puts and made 20, 30x on them.
Hmm.
So that's what I typically like to do, is outsized moves, blow-offs, either to the upside or the downside, and just kind of intraday do some day trades on them.
Hmm.
Yeah.
Okay. So, would you say you tend to trade more or less during busy weeks like we're having this week?
It well, I would say if I'm on a good if I'm feeling good and I'm feeling confident and I'm on a roll and I've had some good profits going into a busy week, then I'm more inclined to trade more. And obviously vice versa. If I'm not doing too well and not feeling too confident and everything just feels kind of like what the hell, and nothing seems to make sense to me, then I just kind of try to sit on my hands best I can.
Okay, makes sense. Okay, let's talk about the big earnings that we got just, I mean, what, 30 minutes ago, less than 30 minutes
Oh
ago.
boy, yeah.
Microsoft and Alphabet were the highlights after the close today. Microsoft, we'll start there, beating expectations, top and bottom line last quarter. So you said you like to play the day after. So kind of give me your reaction to the report and how you might approach this stock tomorrow.
Here's my reaction to both of them beating on earnings. Wow, really?
Yeah.
Like Microsoft?
Hmm.
Microsoft beating Google beating. I mean, there was a quote they pulled. Someone on Twitter shared it. The CEO was saying how many people that the company now serves, like across their 6 main modes of or pillars of how they make money: YouTube, ads, all that stuff, cloud. They collectively serve like literally half the population of the planet Earth.
Mm-hmm.
So, I mean, a company like this at this point, I don't play after they've split too. Like Google for me was a lot more fun and exciting pre-split when the ticker was, what was it, like $1,200, $1,400 a share.
Mm-hmm.
And I know that it's more liquid now, but I've gotten burned so many times that I truly just watch for entertainment because I just sit and go, man, oh man, I wish that I had bought and held back in 2009 when I had a modest $5,000 to my name, and it was at $300 per share pre split, or however many times it split since then. But yeah, I honestly don't really mess with it. I kind of wait for everything to shake out and wait for a chart pattern to kind of present itself, and look for the risk reward, because oftentimes, like, Microsoft is almost unchanged right now. So as is usually the case, it's like the real winners are the option sellers. And I am not going to delude myself into thinking that I'm smarter than those people or machines or whoever, because nobody knows how the hell this stuff works. And I sure as hell don't. I'm sitting here in my bedroom. I'm wearing shorts. Like, I just sit in awe at this stuff afterward and go, wow, man, they really just keep beating every quarter. And sometimes the stock goes up and sometimes inexplicably it goes down. And I do not have the bandwidth to listen to every conference call, and get more of a picture. I'd rather wait for everybody else on Twitter to kind of do that for me and sum it up so I can see, oh, that's why it's kind of lagging after hours, or that's why Google's absolutely ripping faces. I mean, what's it at right now? Yeah, it's just, yeah. I mean, I was looking at some call options, but then I ultimately decided, nah, I'm not going to do it. You know what I bought instead? Snapchat calls. And not so good.
No.
Not so good. Yeah, that one's tanked down 20%. Well, live and learn.
Right. True. Okay, so you said if you're going to approach Microsoft, we'll use that as an example, you're going to wait for a chart pattern to emerge that makes you want to buy. So what would you say are like the indicators that you focus on the most on a chart? What's the pattern that you look for when you're looking for a stock to buy?
Tickers that are in an uptrend for the last 3 to 6 months. And lately I've been gravitating toward just up and coming names. Like there's one that I wish that I had been buying sooner. AEHR is one that I've been really following closely. So like that's one that I want to buy on dips. Ones that are in just a tradable channel where the RSI isn't too overbought, and where volume is steady and picking up on dips. And yeah, that's what I look for. Just above the moving averages, the 50, the 20,
and say,
the 200.
what are the indicators you're using on your charts?
I use very basic bare bones. I've got the 50 simple moving average, the 20 simple moving average, the MACD, the RSI. I use a volume profile sometimes. For shorter term, I've got the 8 and the 21 EMA, like pretty much everybody does. Yeah, and then the 100, the 200 simple moving averages, what pretty much everybody uses.
Yeah. So for this earnings season as a whole, what are you kind of expecting, maybe focusing on, if anything?
I am expecting the big tech companies to just keep absolutely decimating, well, not decimating, but beating analyst expectations, which begs the question, how the hell are these analysts so continually off? I got to get a job doing what they do so I can just the same thing and go, yeah, I think they're gonna beat, and then you just get beat, and who cares? You still get a paycheck. But like Meta, Visa reported today and beat. Surprise. It wasn't a surprise, but they beat because people are out spending money. And to that extent, I'm curious how McDonald's is going to do.
Snap with their lower, I think hold on. The plunge, they're blaming it on the weak forecast. Everyone kind of looks at Snap as like a barometer pre-Meta for Meta, usually the next day. Do you see that maybe bleeding over into the Meta report?
Not really. If anything, I see it as a kind of a counterweight. I see if Snap's not doing too well, then perhaps it's because fewer and fewer people are using it, and therefore more and more people are using Instagram, not necessarily Facebook, but yeah, and like Threads just came out, and I think they've already monetized it. I mean, I've gone on there a couple times and I've already seen ads, so that's going to be a brand new revenue source that they can just tap into. So it wouldn't surprise me to see it up tomorrow after hours, but then it also wouldn't surprise me to see it sell off a little bit as Threads numbers kind of, I'm sure, have peaked and are probably going to come back down to earth. Yeah, I don't know, because ad dollars are kind of coming back on, as is evidenced by Google. So those ad dollars are probably going to go to where people are, and it's less likely that it's going to be Snapchat, more likely going to be YouTube, search, Instagram, the networks and the apps and the websites that people are actually using. Even though Snapchat does pay the most to creators, like that David Dobrik guy makes an insane amount of money per month just on Snapchat alone. But that doesn't, if anything, that's worse because it comes at their bottom line.
The revenue.
Yeah.
So the other big news of this week, of course, on top of all these big tech earnings, is tomorrow's Fed decision. It's baked in at this point that we're going to get another 25 basis point rate hike. So the real focus is, of course, on Chairman Jerome Powell's press conference after the decision is out. Kind of traders, or not just, everyone wants to know what's going to happen next. Are we going to get that second one that the Fed kind of penciled in with the dot plot? Are they going to stop? So how would you approach a day like tomorrow when big news is set to drop late in the session?
I would approach a day like tomorrow being prepared to be wrong no matter what, because that's always how it goes for me on Fed days, where I see Jerome Powell with his stupid glasses on the stupid bridge of his dumb nose and his tiny little mouth talking about stuff, just repeating the same thing and watching the market react the same way it always does, which is an initial just like algos going nuts, and then surprise, just more upside, relentless upside. That's just, so what am I going to do? I am going to hold on to the puts that I've got just in case something sneaks out of his mouth that the market doesn't like or is scared by. And otherwise, I'm just gonna watch, because I've been burned on Fed days too many times. Both from, actually, I've had some good trading days on Fed days. I shouldn't say that. So, but I've had countless times where I've should have held on to the positions that I had because he says something positive that causes everything to rock. I think he's learned his lesson now. And as much as people on FinTwit like to pontificate about his true intention, which is to tank the markets, that's such utter BS. Like, there's no way that that's what, sure, he wants to take the froth out a little bit, but that doesn't mean that he's going to intentionally try to tank the markets. Because if that's what he wanted to do, he could have done it 100 times by now, by, just in any number of ways. So it's exhausting to be a trader and to constantly see everybody weighing in with their 2 cents, when we all know deep down the same thing is going to happen as is what always happens, that their goal is to get inflation to 2%, and they still haven't seen, they're seeing some sign. Just, he's given us just enough. It's like being in a relationship with a crummy partner who's like avoidant, who's just
Yeah.
giving you like, yeah, I'm happy with you and I really love you, but I don't know if I'm ready to move in together, but I don't want to break up. It's just, it's just enough to keep everybody on their toes, and it's exceedingly frustrating. And I just want it to be behind us so that we can move on to the next thing that everybody's going to focus on for the week, because that's how everybody's attention spans is these days. It's just whatever's the big story for the week, that's the narrative that we can all collectively focus on for why the market's up or why the market's down.
Mm-hmm. Okay, I'm going to ask you to make a prediction. If you had to predict tomorrow, do you think the Fed, tomorrow is the last rate hike, or there's room for another rate hike this year?
I think that there's absolutely room for another rate hike, because I think in the back half of the year, there could be surprise upside inflation readings. And I think that, yeah, I think it's more likely that the Fed holds for longer than it is that the Fed raises again. And geez Louise, Google just cannot stop going up. Wow. Jeez. Ugh. But yeah, I think that they probably maybe raise one more time, but yeah, it's priced in at this point. Even another 100 basis points, the bulls can say, well, it's already been priced in, because everything is ultimately priced in. You have bad news these days that a comet is careening toward Earth. Give it a week for the market to process it, and now, hey, well, it's priced in. We know that the comet is heading toward Earth, and it's got some valuable precious metals in it. So that's actually bullish.
Okay. You were trading during the kind of wild market of 2020, 2021, when anyone could put in $1 and 10x it in 10 minutes, or, whatever. Extreme volatility, extreme upside. Then we had the bear market of 2022. How would you describe the market environment that we're in now? I think I know, but how would you describe it?
It's the wall of worry. That's how I would describe it, where you have prominent bearish leaning big names like what's his name? Kalanik. That's the guy. I'm so sorry. And Mike Wilson is a better one. Who have been increasingly outspoken in their belief that we are just in a bear market bounce, and that this is all just preceding a further drop down the line. But then sure enough, he capitulated, I think yesterday morning, saying that he was wrong, and that he still thinks that there's going to be not a reckoning, but that earnings are going to slow down, forecasts are going to be lowered, that input costs are going to, what did he say, that they are going to rise, and that demand is going to come down. And but I think that that's conducive to the bull markets climb a wall of worry narrative, that yeah, it never feels good when the market goes up and you look around and you're like, yeah, but like rent is higher than it's ever been in the biggest cities in the country. And depending on who you ask, I mean, anecdotally, tons of people that I know are increasingly taking on credit, and they are struggling to make ends meet. And it's like, okay, when it comes down to it, the market doesn't care about that. The market cares about options flows, and it cares about, it's forward looking, and it cares about the biggest names. If they're continually able to print money, i.e. Google, Meta, Microsoft, and as long as that continues to happen, that wall of worry is just going to keep stacking bricks on top of it, because that's where we're headed. I mean, it's frustrating, because as someone who's still relatively young, I want my chance at another 2020. I want my chance at another 2009. I want to be able to buy stocks at a steep discount. I don't want to buy Apple at a $3 trillion valuation. It sucks. It's
Mm-hmm.
painful. It's frustrating.
Mm-hmm.
It's like, really, like, I really got to sit here and do that. And it's just, ugh, it's just gross. It just feels it. The froth is there, but it's also like, well, who cares? You look around and everybody's slurping up the froth. The froth, like,
Mm. Yep.
I don't know.
Would you say a lot of the fluff, like the extra money that really flooded into the market in 2021, has kind of been flushed out, and the people who didn't know what they were doing in a bear market got pushed out, or they've hung around?
Oh, absolutely. And the reason that I think that is because every single person that I know personally who was once an expert and once following every tick of the meme stocks and then actual other names, I don't hear from them anymore, and they're not out there. And my mom's not asking about the markets. And I mean, I do think that there's something to be said for the advent of these 0-day expiration options and how they are just continually becoming a force that just keeps this perpetual bid. I mean, I'm not going to sit here and pretend that I really understand the structure of these things, because I absolutely don't. When I hear, Jim Carson,
Mm-hmm.
when I hear that guy talk,
Oh, yeah, yeah,
I
yeah.
go over. I'm like, yeah, sure, buddy. You sound smart and you probably know exactly what you're talking about. But no matter how many times he explains option flows and
Mm-hmm.
the way that they dictate how the market moves, I just go, you know what? I'm just going to keep watching charts, because I can't. I'm an old dog who cannot learn any kind of new tricks like this. But yeah, I think all that's to say, I think that a lot of that froth has come out, but I
Mm-hmm.
mean, there's all kinds of different versions of froth. Um,
Mm-hmm.
there's so much money out there, and there's so much that can have what I think is probably outsized influence on price action. And um, it's very humbling, and it's also, like I said, very frustrating, because it's not the same market that it was in 2009 when I first got involved. It feels like a lot of the same opportunities are ancient history, and like, you really, really, really have to go above and beyond to try to find um, a similar kind of edge that you could have had back then, because now everybody's got the same data, everybody's got the same information, everybody's looking at the same things, processing the same news, and it's just, oh boy, it's tough.
Mm-hmm. Okay, let's go to some audience questions. We're a little over halfway through. So just a reminder for everyone who is watching to submit your questions now for Ben, so I can make sure to get to them before the end. We have a couple here, then we'll go back and we'll give people some more time, and et cetera, et cetera. All right, so Miguel asked, as a professional stock trader, how do you assess the risk to reward ratio when evaluating potential investments, and what key factors do you consider before executing a trade?
Oh boy. Well, first of all, I don't know if professional is the right word. I would say,
Well, you're a
yeah,
licensed professional, and
I
it's
am a
what you
licensed
do.
professional. That is correct. So as a professional, how do I assess a good risk reward? Well, it depends on every person. It depends on how much you're willing to risk. If
Mm-hmm.
you're, if your account size is 25,000, 30,000, and you're grappling and you're butting up against that pattern day trade rule constantly, first of all, look into, I tell people this all the time, look into doing prop trading, look into something like T3, because it's so worth it. But otherwise, yeah, I would base it off of the chart. I would base it off of how close it is to support, and then kind of have that be my line in the sand, and then maybe give it 1 or 2% below that, and have that be a mental stop or an actual hard stop, a limit order
Mm-hmm.
or something like that. And yeah, how am I assessing the risk reward? Well, like, do I think that Do I want to risk $1 to make 5? Yes. Do I want to risk $1 to make 50 cents? Probably not. And when I say make 5 or make 50 cents, is the chart setting up in a way where I think that it's got the potential to make an outsized move that that I could capitalize on? And I'm sorry, what was the second half of that question?
What key factors do you consider before executing a trade?
Is the ticker liquid? Is it something that is it like a Google, or is it like this name that I'm in, this quantum company that's totally illiquid? I consider that. I consider where the chart is at. Is it at 52-week highs? Is it within 5% of 52-week highs, which is something that would probably be preferred? Has it just had earnings? Is our earnings looming? Has there been a pickup in the volume of the ticker? I'll look online. I'll check the cash tag on Twitter and see if there's any insights that I might be missing from someone smarter than me, because I'm not going to fool myself. There's plenty of people out there who are smarter than me. And if the ticker gets more and more interesting, then I start to dig a little deeper. I start to see how much institutional ownership there might be. I look at their balance sheet. I look at their market. Well, obviously, I look at their market cap. But one big thing is that I neglected to mention is taking the 30,000 foot view, as a friend and mentor of mine, this guy Don, would say, and look at the weekly chart. Look at the monthly chart. Are they setting up? You want to see it set up from the top down. If the monthly looks okay and the weekly looks good and the daily looks even better, hot diggity. If the more stars that align, the more comfortable I am assessing my risk reward.
Okay. Our next question is from Noah. He asked, when swing trading, do you like to use a stop loss at a specific percentage? Do you have a typical exit strategy for swings?
I should have a better one. It is something that it is a duty as a trader that I neglect often. And it's kind of I need to practice what I preach sort of thing. But it's less a percentage and more a dollar amount, that if a swing is going against me, I start to kind of rethink and challenge myself to answer the question, am I wrong? And I've had swing trades that just absolutely blew up and lost me a lot of money. And around like $5,000, if I'm in the red around $5,000, I start to go, okay, I need to either cut this here or kind of reassess and maybe I don't know, not average down. I guess average down. Like, hey, if it's still setting up and I still like it, and I'm like, okay, maybe I was just a little early in picking up some shares of this thing, then maybe I'll pick up a few more, or maybe I'll even like sell half. If I think that it could dip more, then I'll just rebuy back in a little bit lower. But yeah, all in all, for me, it's more like the line in the sand is more, well, the price per share, of course. Like if it loses a significant support level, but beyond that, it's a dollar amount of around like $5,000 is when I would start to really reconsider.
Okay. Kevin asked, how much do you use the news headlines when looking at potential positions, specifically things like international trade tariffs, regulation decisions, lawsuits, etc.?
It depends on the name, obviously, but I use them. I try to use them at least to understand, like if there's a big outsized move like this Silicon Motion ticker symbol, I believe it's Silicon Motion. Yeah, Silicon Motion Technology Corp, SIMO, went from about $50 a share all the way up to 80 and then knocked right back down to 50, which is a huge move. And it's like, okay, something's going on here. And when there's an outsized move or an unusual move like that, that's when I usually am the most inclined to check on what's going on. And then if it's something like one of these where it's highly sensitive to news about tariffs or news about China and Taiwan, I just try to avoid it unless I'm in it just for a scalp, because those things are so dense. They are constantly changing on the whims of whoever's being interviewed that day or whatever headline comes across it. It reminds me of however many years ago, 5-6 years ago, when Bitcoin was at the mercy of all these South Korea headlines. It would be like you wake up and one day Bitcoin's down 20% because South Korea is going to implement these new rules. And there's too much to even catch up on. And oftentimes it's hard for me to tell truth from non-truth. So yeah, if it's too much, I stay out of it.
Okay. Mohammed said, it looks like you're holding SPY and Q puts. What factors make you think the market will correct in the short term?
I mean, honestly, I was drinking a little bit too much of the Mike Wilson Kool-Aid, because I like that guy. I like what he has to say. I like how he says it. I like but then, when it comes down to it, and it was getting frustrating seeing him say certain things like how the breadth wasn't, there wasn't enough participation. But then in the back of my mind, I'm like, yeah, that's because it's going to improve, and that's all that it needs. Is we're going to get the rotation narrative next, because currently, despite the market going up, oh, it's only in a small concentration of stocks. Well, guess what? That's just setting the stage for when the money starts to rotate out of those big names and into everything else. Then what's your story going to be? But yeah, I was kind of looking at it. I was seeing a little bit of a negative divergence where the indices were going higher, but it was on lower relative strength on the RSI. And for me, that's kind of it can be a topping pattern. But then, the more people I see pointing that out, the more I'm realizing, okay, I'm not the only one seeing that. And superstitiously, I'm like, well, probably not going to happen. We're probably just going to keep going higher. It's probably going to be something where we just keep going higher until we're at all-time highs, and then we just kind of mellow out until the VIX is back at like 12 or 11, until the next long tail black swan thing hits everybody, or there's just straight up selling. I mean, you never know. It's just sometimes. So I like to have a little bit of it, like a month out, just in case. I mean, call that a hedge.
All right. Ryan asked, what are the charting timeframes that are most important to you as a swing trader?
I mostly look at the 15-minute intraday, and then I'll just go up from there. 15-minute, daily, weekly, monthly. Pretty straightforward.
Okay. So for the market as a whole, what are the key levels that you're currently monitoring?
I mean, along with everybody else, I'm watching this like just under 4,600 level. I mean, SPY's just under like 13 points from an all-time high. So I'm just watching how we're going to handle this, and seeing if it can hold. And then if we pull back to the previous little breakout zone from a couple weeks ago around 443, and just above that at 445.85, the 20-day simple moving average, that's what I'm watching. I'm just seeing if those hold, and if they don't, then I'm looking at the 50-day moving average, which is just about 432.57.
Okay. So you've mentioned a couple times that going prop, working with T3 really kind of changed your career in trading. So talk about why you chose to go prop. Like, what was the thing that pushed you toward that, and just the benefits that you've experienced yourself by working with T3?
Right. What pushed me was, I mean, I'll combine those questions into one answer, basically, which is that it's a lot easier on your psychology if you have $100,000 account and you lose 10 grand. Your account is now 90,000. That's all you got to trade with. You lose another 10 grand, you're down to $80,000 in your trading account. and that can have some adverse effects on your psychology. Whereas with a prop trading account, typically you have the same amount of buying power as you did yesterday. If I have however much, if I have $500,000 in buying power and I'm down $5,000 on the day, tomorrow I still have that $500,000 in buying power. So it doesn't feel like, oh my God, I'm actively like losing my money. And that, just that little bit does wonders for your psychology of just, oh yeah, I can relax. I don't have to worry that that I'm gonna, my account is gonna be decimated. Because yeah, then you're gonna, if you're gonna lose anyway, you might as well do it with a prop firm, because at least then you have leverage to actually trade with. Like if I only had $25,000, I would not trade it just as $25,000 myself. I would rather deposit it into a prop firm and then trade with 10, 20x that amount. And the most that I can lose is that $25,000 anyway, which is how I would have been if I were on my own. So to me, it's just like, oh yeah, that's a no-brainer. And being able to keep 90% of the profits is like, oh, boo-hoo, I'm paying a 10% tax on the privilege of having way more money to trade with, and the psychology benefits. Sign me up.
Part of what also comes with T3 Trading Group is, a community of other traders to talk to bounce ideas off of, to get advice from, to have mentor you,
Right.
Et cetera, wherever you are in your career. How has that community benefited you as a trader?
Quite a bit. Having other people to talk to through the ups and especially the downs can be very, very beneficial, because it can be a lonely way to make money sometimes, positively and negatively. But then, yeah, having other people to bounce ideas off of is a really valuable thing, because someone might see something that you're not seeing, or someone might have an idea that you would never even thought of. There's always something to learn. There's always someone to learn it from. And those are pretty invaluable things. Is that the right word? Yeah.
Yeah. Part of the requirements to be a trader with T3 Trading is to be licensed, Series 57.
Correct.
90% sure. Okay. I should know that, obviously. So how was the licensing process, and do you think it was worth it?
Well, I cheated on my exams, so I can't really attest to that. I'm 100% kidding. They really make it so that you can't cheat. No, it was like a good month of study for both of them, the SIE and then another month for the 57. And if you've already been trading, most of the stuff. So
right.
I found it to be, it was a lot of great refreshers on things that I had already felt pretty comfortable with, but obviously a lot of things that I totally didn't know much about, like bonds, for example. So all in all, very, very, very beneficial, and totally not as hard as some people think it is. It's not like studying for the bar or anything like that. It's cool.
Yeah. Okay. Our next question is from Miguel, but it only applies. Do you trade crypto?
No.
Okay, so then the question doesn't apply. Sorry, Miguel.
Sorry, Miguel.
Yeah, he was asking about the challenges and risks with trading crypto, but since you don't trade crypto, it doesn't really apply. So tell me, over the past week, tell me about the best trade you've had and what made it go good.
Over the past week, I think actually those first solar calls were probably the best ones. Because you had a nice little, let me pull up that chart. When was that pop? We had a nice little pop that juiced the premiums. Yeah, that was on the 17th. Saw a nice pop on those then. And yeah, I would say that was probably my favorite or best one of the last week. Uh, what else did I had some common shares in another that I finally had sold. I can't remember. No, that was weeks ago. Sorry. Yeah, I would say those first solar calls.
Okay, and then on the flip side, tell me about the worst trade you've had over the past week and what made it go wrong.
Worst trade I've had over the past week. You had to ask. Um, I would say all of my put positions that I've put little bits into, because every uptick is just murder on my soul and
Mm,
adds white hairs to my head and my face. Um, yeah, it's brutal holding on to hedges because they tend to you tend to add more and more to them that you didn't realize, and then before you know it, you're like, damn, I've got like 20 grand in puts. Holy God. And
mm-hmm.
then yeah, then the market just keeps rocketing and you're like, why oh why didn't I just put it all into call options like everybody seems to do every single day? And it's exhausting.
How do you deal with the feeling of FOMO as a trader?
Screaming, crying, cigarettes, candy, um none of those things. How do I deal with FOMO? That oh man, I mean that's something that you battle with daily.
Mm-hmm.
uh, Especially like I said, names where you knew that it was a good buy and you knew you felt like, oh yeah, no, this makes sense, I should load up on this, but for whatever reason either you forget or you just don't. You just kind of have to remind yourself, or you miss earnings, a big earnings trade like Nvidia.
Mm-hmm.
I deal with it by just kind of going at this point and just kind of let it roll off my shoulders. Just okay, you know what, fine, I missed it. I remind myself of good calls that I have made, of ones that I've participated in. And I remind myself that just as well as I thought 2 months ago, 2 years ago, oh, this is the last big opportunity I'm ever going to see or ever going to get. There's always going to be another one. There is
Mm-hmm.
always going to be another one.
Yeah.
So you just try to remind yourself that, hey, if I've caught enough, even ones that I've missed, if I was cognizant enough to recognize them before they popped off, even though I missed it, I'm confident that I have the same tools to get the next one.
What stocks would you say you're feeling bullish about right now and why?
Let's see. Silicon Valley Bank is a good one. First Republic Bank is a good one. Okay, I'm glad you got that because those are bankrupt.
Yes.
I like I'm in some Oscar, the healthcare company.
Yeah.
I look at the fundamentals on it and I'm like, okay, it's one of those ones where I'm going, either this is gonna 10x or I'm missing something. I'm stupid.
Mm.
Uh,
What are the fundamentals that make you feel like that?
it's got a low market cap, good cash position, high institutional ownership, growing revenues, and they just installed a CEO. I can't remember his name. I believe he was the head of Aetna for
Mm.
the better part of a decade, and I mean, it went from I don't know $12 to 80 something bucks under his watch. So I figure, hey, you got a guy who really knows how the healthcare industry works, coupled with this new age tech focused app first healthcare company that I'm personally a customer of.
Mm-hmm.
And I think, all right, there's something there. Maybe they can turn it around and turn it into a moneymaker. So there's that. I've been really paying close attention to this company called GTLS.
Mm-hmm.
Um, they are uh, their Chart Industries is the name, but
Mm-hmm.
they do a lot of renewable energy stuff, hydrogen, liquid natural gas, and that's transportation, storage, all of that stuff. And they are a name that has just continued to beat and raise, beat and raise, beat and raise.
Mm.
So they recently made an acquisition, hence the big drop in the stock price, because a lot of it was paid for, I believe, with cash and stock, and the market didn't like it at first, but it has proven over the last quarter or two to be actually quite accretive to their bottom line. I think it's in an interesting industry, again, kind of relatively low market cap, around like $6 or $7 billion. I want to say I like the CEO, female CEO. She seems to really know her stuff. And what I like is that they, over the last couple of years, set these benchmarks for themselves and then just continue to exceed, to meet and exceed those benchmarks. And that's something that you want to see.
Mm-hmm.
I like that. I like Unity. I think Unity is interesting, especially with Apple bringing augmented
Yeah.
reality to the forefront now with the headset, and they are like a partner with Apple. So I think that we could see a big boost in that name. AMD is an interesting one just because Nvidia is surely not going to be the only winner in this chip AI space.
Yeah.
And then yeah, I like that AEHR test systems. They're in the silicon photonics. Again, something that I mean I still need to research the hell out of this stuff because it's way over my head, but they keep beating and raising, and the stock is in an uptrend, and I am not going to fight that kind of trend. I am going to want to follow the money and buy dips, and their value. I mean, I look at SMCI. I don't know if you saw that one, but it has just gone from like $20 to $300 over the last couple of years, and I feel like from what I'm seeing, AEHR is in a similar kind of position where totally under the radar. Nobody really knows about them. And sorry, my phone keeps going off in the background, but
Haven't heard it. You're good.
I think, oh, well, wonderful. But yeah, I think that that's one that it's the market cap is just above $1 billion. It's just one I'm going to be watching. And what I like to do with each one of these is I like to read the conference call transcripts of the last few quarterly earnings to get a more in-depth picture of what the company's doing, what they've been doing, their goals, their own forecasts for not only their own companies but for the industries that they're in. And yeah, these ones are just pretty over. What I glean from them is that they're quite bullish. So
Okay. And then on the flip side, what are you feeling bearish about?
oh, Babu.
I mean,
I
if you're not, then
hate,
you're not.
no, I am. It's something where, hey, I've been wrong, and man, oh man, have I just been wrong. But Tesla, I think, is the biggest sham. I mean, I I could talk for hours about how Elon Musk just sucks, and I don't like him, and I think that he has successfully fooled so many people. And in doing so, he has elevated himself to a position of being totally untouchable because the American government needs SpaceX, and Tesla is quite literally too big to fail now. And just I just think that his predictions and analyst predictions like Kathy Wood for things like full self-driving are so pie in the sky, it's absolutely laughable. But I could be wrong, and I'd be glad to eat crow once again when and if that happens. I also think that I'm not bearish on it necessarily, but I think Nvidia has kind of, I mean, it's ridiculous. They raised revenue expectations $2 billion from 9 to $11 billion in revenue, and that warrants like I don't know $100 billion in market cap that it tacked on. Give me a break. Come on, come on. So I don't know, but that's not to say that I'm necessarily bearish on them. I just think that it's kind of overblown, and the hype is just, again, to use the word exhausting, it's exhausting. I'm just like, really, people are still doing this? Like, ugh, okay, fine.
Okay, we'll have one final question from the audience here because he submitted it just in time. So Miguel asked, are ESG investments on your radar for trading? Based on that, do you assess the investment potential of energy companies while considering their environmental impact and sustainability practices?
I know very little about that world. I have seen Elon himself critique it because Tesla was shunned by the ESG community, even though
Mm-hmm.
it's like, buddy, it's because of the batteries that y'all source, because you need to
Mm-hmm.
go mine these rare earths out of the earth.
Mm-hmm.
That's the problem that they had with it. But I I really, yeah, I don't know. I think that it's a novel idea in principle that, like, hey, we should invest more in these things that benefit the planet. And I think that things like solar energy are worth looking into, but like not looking into because they've been around for forever and they're proving to really be beneficial, especially in Europe. I think they're on the cusp of an energy surplus or something like that. But yeah, I if anything, I would just look at individual names in the ESG space and then just do deeper dives to see what potential they might actually have.
All right. Well, thank you, Ben, for joining me for this edition of Conversations with a Pro Trader. This was a really great discussion, and I hope to have you back in the future.
I'd love to. Thank you so much for having me, Greta. This was really fun.
Yeah. All right. Thank you, everyone, for tuning in, and thank you, Ben, for your time.
Thank you.